All right, what is up, internet? Quick market update. None of this is financial advice, of course. I'm not a financial advisor, so if you're seeking financial advice, make sure you go talk to a real one. As I've talked about before, we've been in this range for about a month, and we finally broke down from here, and I'm going to talk about this range, okay? As you can see, we kind of held in at this order block right here. We're currently holding on top of this, so that is very interesting. This is kind of what I was expecting, that we'd make a move down here to about 28K, and now the question to me becomes, are we going to see some sort of event up here where we continue down, or are we going to get a squeeze of some sort to the upside? Okay, and if we did get a squeeze, I'm looking at potentially taking profit right up here, because you have this order block that has not been mitigated. Another good place that would probably be good to take profit would just be at the midpoint when you break these highs, okay, because that has not been tested. And interesting enough, if we do take this range here, the high here to the low of this range, as you can see, we never even get to the mid range. So it really shows how bearish the price action was right here, right? And you can really see how bearish just the general price action in here was, because the short squeezes that you got were pretty small compared to the other squeezes that we got in the past. You could see there was a lot more leverage in the system with short squeezes like this, even like this was a short squeeze in of itself, fueled by the SEC losing to Ripple news that came out right there. But anyways, let's take a closer look at what's going on here. Okay, so the squeeze that we got here, this was the final move, right, that sent us down to the lows. And as you can see, it came to mitigate some of the positions that were in here. If we take the POC of just this order block right here, you can see the POCs right here, and we do tag that, even going up just a little bit, breaking this high right there. We do not break the high up here, so it is a lower high in the grand scheme of things, but once again, this was the start of the downtrend that sent us below the lows. Okay, so taking a look at open interest here, you can see open interest is declining all throughout this regime here. And interesting enough, when you get this squeeze up, open interest continues to go down, right? Which is very interesting to me, because usually when you have these squeezes up, right, usually you'll see at least a little bit of an increase in open interest, or especially on the nuke, you'll see a sudden increase in open interest, where it is most likely shorts that are getting trapped at the bottom. So the market makers like to step up the market, right? But interesting enough, on this short squeeze, you do not see any of that, which could have been maybe the reason why we had the move down, because of the lack of open interest here. It signaled to the market makers that it's time to move the market lower, although that is complete speculation on my end, just a theory. Scrolling back a little bit here, you can even see, look at this. On this move up here, you had a significant increase in open interest right here. Looks like about 8% increase in open interest. And then even when we have this nuke down, you can see open interest does increase a little bit there, about 5%, which was most likely people that were shorting the bottom here. Unfortunately, it does not look like these shorts were ever liquidated because there was probably too much sell pressure in this area. So once again, that is very interesting to me, how even on this squeeze down, we do not see an increase in open interest. So what's interesting to me is open interest does increase right here, which coincides with this move up, right? But notice how when we have this flush down, open interest does not budge at all. In fact, it increases. So that tells me that these are actually shorts that opened up in here that are currently in profit. Because if these were longs that opened up, then you should have seen a sharp decline in open interest upon this move right here. That's not what we see. Of course, open interest continues to increase here, and it looks like it is decreasing right here ever since we had this event right here. So it looks like potentially it could be longs closing, it could be shorts covering. I'm not exactly sure what's going on. Okay, taking a look at Coinalyze to see if there's any signal here. Okay, once again, we had that huge increase in open interest right here, which coincided with this move right here, and it looks like funding rate is indeed declining. Because if funding rate is declining and open interest is increasing, that is indicative of shorts entering the market. Okay, if funding rate is increasing and open interest is increasing, like right here, that is indicative of longs entering in the market. So that is interesting. Like right here, it appears that on this move up right here in open interest, there were indeed a lot of longs that opened up right here. And currently, price is trading sideways right now. It's kind of consolidating in this period, which makes it very interesting, because you have a lot of shorts that opened up right here. You have a lot of longs that opened up right here, and price is kind of just staying in the middle of it all, not really picking a decision. Now, it does kind of make sense that price would be consolidating because we do have FOMC tomorrow. So there's going to be increased volatility. Overall, the price action has been bullish, you know, creating these UTADs, these up thrusts here. And I have been trying to trade this. I actually tried to take 3 different shorts. Okay, I got involved once I saw this up thrust here. I tried to get involved on kind of a retracement of that, and of course I got stopped out with this move right here. I re-entered at the top right here and I was in profit, but then I ended up getting stopped out from this move right here, right? I actually set my stop loss to a bit to about break even, so when I did get stopped out, it wasn't that bad of a loss, and I did get a really good entry right here, expecting us to come down, take out this low right here, and unfortunately I got stopped out right there. So I have not entered in a trade again. I'm not exactly sure what my bias is at the moment, but it's really interesting to see these up thrusts come, like almost 4 right here. 1, 2, 3, 4. That tells me that the fact that we're getting those up thrusts and price is making higher lows is very interesting to me, and I think I'm just going to observe and see what is going on. So I went into Exocharts and took screenshots of the different volumes that we saw at the lows and the highs, just for future reference, because I think it's important to become accustomed to how much volume is traded during these certain regimes. Okay, so 262 million volume at the lows here. Very interesting. The delta is not as severe as I thought it was. Okay, so I wonder, it looks like there was a lot of buying that was going on here. When we sprung down here, there was also a significant amount of volume, 32 million in negative delta. Okay, once we came back and tested here, 17 million, 8 million, and then for these up thrusts, it's anywhere from 70 million to 50 million, but especially right here you had 116 million. So that's very interesting to take note of. I would consider this the selling climax, right? And this right here the automatic reaction. Okay, got your selling climax, automatic reaction. It does look like you have a little bit of a spring here, right? And then you have a structure test right here. Now these, you can think of these as up thrusts, whereas like this one is the one that actually came up above the range, right? So very interesting price action, how you had just these multiple up thrusts here. But I think what kind of threw me off guard is one thing I should have paid attention to is the fact that price is continuing to make higher lows. Should have told me that these other up thrusts were coming, but the one that really threw me off guard was this one. It was this one that kind of threw me off guard, but I have seen this before. Well, price will kind of make this false breakdown and then shoot back up, right? So I think the best way I could have executed this or managed this is once we actually had this break of structure right here, I should have moved my stop loss to break even or in profit right here. So in the event that you do have something like this, you know, I'll get stopped out, I'll still make a little bit of profit, but I'll be able to re-enter even in a better position. But even here you can see price has made another higher low. So who knows if we're actually going to come down and break structure, or if we're going to kind of just trade sideways until we actually have FOMC tomorrow. But yeah, interesting to see how price kind of grinds its way up, right? It holds above the midpoint, and as soon as you break down right here, you have that squeeze up. There wasn't even that much open interest that came in right here, but you did have a decent flush right here on this move. And it looks like if you take this bottom right here where open interest started to increase substantially, you actually do have a flush right here. So interesting to see that price is continuing to go up in spite of there not being that much open interest opening up in this area. Looks like the majority of the open interest opened up over here, as well as like throughout this period while this bottom was being formed. Okay, just thinking of plans for FOMC price action. I'm looking to take longs if we go underneath here, and I'm looking to take shorts if we wick up here. So ideally, if price kind of just like shoots its way up here, I'm gonna take shorts, kind of play it back down to the break of structure. You know, if price instead goes down here, wicks down here, mitigating some of the positions right here, I'll look to go long, playing it again to the upside, and probably targeting just the midpoint of this range, to be honest, right? Not going to get too greedy, especially with how volatile FOMC can be. I think taking longs and shorts outside of the boundaries of the range and then playing it to the middle, I think is a pretty safe bet. Of course, trading FOMC can be pretty tricky, pretty risky because of how volatile it is. One thing I am debating is whether or not this is an accumulation structure or a distribution structure. So my bias is that this is accumulation of some sort, and we're going to squeeze up. So it's nice to see that we do have open interest increasing throughout this period right here, because there is lots of shorts and there's probably longs in here that can get trapped, and that would be fuel to send us up higher. Now, the question is this low going to get taken? Because that would be the ideal setup for me. If we can wick down beneath this low right here and then come back up, then that tells me that very likely that we can blast up out of here, right? And if I can get positioned on the spring here, then when we do wick up of some sort, then I can set my stop loss to break even or even in profit. So if it does break down eventually, at least I'll be protected, right? One thing that is also interesting, so like I mentioned, we do have this order block over here where price has been, where price found support. And if you take the volume profile of this range, right, and you see the POC right here, and if we extend the POC, you can see that the POC is actually beneath here. So if we do spring down, it does make sense that we would come and tag the POC in the event that we come down here before we squeeze up. So that would be my ideal situation, to be honest. Like if we can spring down here, I can get my position right here, and then we send it all the way up. Okay, one thing I forgot to take a look at was the CVDs, okay, because this is actually pretty important. As we can see, spot is selling throughout this period. So that tells me that there is actually no organic demand in here, right? Because if there was an actual bid, if there was actually demand at this level, you would see spot bidding. But instead what you're getting is you're getting futures that is bidding the market up. So perfect example of this, see how futures is making higher lows while spot is going down into the right. It's selling off. So that gives more credit to the idea in my mind that if we do squeeze up out of here, it is actually going to be a distribution event and not a legitimate move, okay? Because we don't actually have real demand here. Furthermore, if we do squeeze from here and we come up here, it's also very likely that these lows will be taken if we do nuke down, okay? So right now, my bias is that we are going to squeeze up because typically when you have breakdowns from the structures, you get a lot of people that short the bottoms expecting it to go down even further, and they're just used as fuel to send up, right? At highest, I think we can come up to mitigate some of the volume that's in here or some of the positions that are in here. And because spot is not bidding in this area and futures is just bidding, it's very likely that when we do reverse, this low will get taken down. And I'm going to be looking for us to actually find meaningful supports and a meaningful bid kind of at this level right here. Otherwise, if this does happen to be a redistribution, then probably what we would see is we might not even make it to this POC, but we might come down here to mitigate some of the positions right here before we make it up here, maybe retesting the underside of this right here, mitigating some of the orders that are right here before sharply reversing down. At least that's just a scenario, right? It's 100% speculation, but those are my thoughts kind of right now. Video is getting kind of long, so I'm going to cut it here, but thanks for watching, and that's my plan for FOMC. Again, not financial advice, but I'll see you guys next time. Peace out.